Hello, everyone. Welcome back to again Tradeify Crypto YouTube channel. And it is Thursday. Today we'll have Anastasia covering the volume analysis, and things which mainly you're going to like if you are trading volume profiles. So stick with us. Uh, it will be an amazing session, and make sure to like this today's stream, and the target is today 1,000 likes. Being greedy from the starting. Okay, so yeah, let's talk about market, what happened, and what kind of movement we had in the Bitcoin. Bitcoin is just saying as so. I'm just gonna range. Um, I'm just gonna range after giving you guys a FOMO sell flush for 3-4 days, and I'm just gonna range. I don't care what you do. So yeah, I mean, pretty much active more on, as Glenn says, on hype. Hype is doing absolutely amazing. It's like another um, it's like another Zcash. But before hype, let's break down what I have my view on the Ethereum and Bitcoin, because those are the main boss of this market. So we are going to break down those two first. Then we will talk about altcoins. So looking at my chart uh, on the daily. Welcome everyone. Keep writing something in the chat, or maybe hello, or any emoji. So I can understand how many people wants to participate in the giveaway when we warm up the stream. So keep writing whatever you want, not whatever, because I have rights to block you now. It's a good power to have. I feel good. So my chart looks on the higher time frame completely naked. Let's apply the volume, and let's see that obviously we have really low volume on this bottom area. That's why price is not closing below and taking rejection from this Wix. As you guys know that I use Wix as well. So I feel the next area where price can give us some rejection is going to be this one. So maybe we can call it the fair value gap, the FVG, the one which saves a lot of trader. I'm kidding. It's not. It's just got aligned with the low volume, nothing else. So I'm expecting that price will tap or maybe come here and will give us some sort of entry. If not, then we can go till 67,000 where we have this high volume node. So I'm expecting these two areas. So that's my analysis on Bitcoin, and without any doubt we'll have same view on Ethereum as well. So let's go on Ethereum, a pair who realized that I have to do a comeback finally after 2 months. Yeah. So let's okay, on lower time frame, looking good, not that bad. I mean, I think I can see some intraday opportunities, but I'm not active on this main coins. Hype and Zcash and Tau is something which I look at every single day, because they don't really care, and also they are not co-related with Bitcoin and Ethereum. I'm not saying 100%, because when we see a very random volume in the market in the Bitcoin or Ethereum, then they do give us some sort of reaction. But that does not mean that if Ethereum and Bitcoin is in range, then the other altcoin should also, like Doge will copy paste same price action as these two pairs. What we can do is let's take a look at Dogecoin and be nice to that coin, because we have been very rude from many weeks. Okay, on the 4 hour, as you guys can see, as I said, that Doge is like, I'm a good bear, but I like to follow the senseis, the Bitcoin and Ethereum. So they are not. It's not really moving. Have you Are you guys actually trading Doge? If yes, type yes in the chat, and let me know where you took an entry in which session, and I would love to see how you're surviving on this range coin. Okay, so yeah, okay. Let's talk about Ethereum in deep. Not so deep because we are already very deep and in a range. So I'd assume that price is going to tap this point of control again, and yeah, I think nothing new. But see, now here's the part which I like to always push when I talk about Ethereum and Bitcoin. If we talk about strength and weakness, let's go on this plain black screen, and let me show you explain you guys what I actually mean. So let's assume this is a lower low formed, and I'm going to give it the yellow color, and we are going to assume that it is Bitcoin price action forming lower low. And another one, this is Ethereum because it's blue. Okay, so now this is what we have in the current price action on the higher time frame. I'm talking about daily and weekly. So in order to understand strength and weakness, it will change on different time frames. If you are in the higher time frame, you'll see Ethereum is more weaker, but if you go on lower time frames, the story will change. So what we had from a couple of days in the Bitcoin is something like that. And okay, I think if I should keep it simple, let's say something like this, and let me mark it yellow. So in here we can see that Bitcoin reached this high, and let's mark Bitcoin as Ethereum as well. So Ethereum from this point, and it's here. So this swing points, we have to assume that the swing points contains the same date and time. So you can see that Ethereum closed really above than Bitcoin, even though Ethereum is weaker on higher time frame. So you always have to make sure that you have good idea of what's happening on the minor trend. As Jonathan explained during his session on the Wednesday, on the previous week on Wednesday, if higher time frame is bullish, then it is not necessary that the lower time frame will be as well. So the mission is to align the higher time frame and lower time frame trend together in order to get proper RR and good volume trades. So, and that's very similar with how I use the correlation. So make sure if you are an intraday trader, I think that does not really matter, because I'm assuming that you will be mainly active on the 4-hour, on the 1-hour chart. But if you are intraday scalper, I'm assuming that you are more active on the 15-minute and 1-hour chart. So you have to make sure that never get confused. Look at the higher time frame chart on both pair if you're using correlation, and don't follow the blind trend of the market. And we have Anastasiia with us, and I'm actually done explaining breaking down the markets. Soon she'll be starting her session, and make sure before she join, okay, she's on the panel, grab your pen and paper. And I think this session is going to be the continuation of the last session. She explained us the ask and bid and the footprint candle, and we had the X-ray session of the candle. And today maybe we are going to another level, and I am also going to sit back and watch her presentation, because it's really interesting, because I think Anastasiia and Boris and Jonathan are the only people who work on presentation. I don't. So I'm learning. uh, I like the way they prepare the presentation and stuff. So yeah. Hello, Anastasiia. How are you doing?
I'm doing good. How are you?
All good. I'm doing good. So, yeah, I think the laptop microphone is working.
Okay, how is it now? Try number 3. They say certain.
It's same, I guess.
No, now it's definitely my normal microphone, so should be all good.
Yeah. I can't really say. I think it's still same.
No,
what do you think?
100% this microphone because I can see this.
Maybe the sensitivity.
Yes, I did choose it correctly. I checked it 3 times.
Okay.
I can try to reload. Maybe it's gonna pick up something with the streaming platform. Arjun, I'm gonna leave you for 1 more second. And I'm gonna jump back in. We're gonna get started just in a second.
Yeah. So yeah, guys, and let me know. I think Glenn is active on the hype. What are you trading? Web3 H2X? What are you trading? MISK 911? Write down what is your favorite coin which you like to trade. And Anastasiia is back. Can you speak something?
Yeah. What about now?
You're on mute, I guess.
No, I'm not.
Roman, is it me? So it's for me or Anastasiia?
Sorry?
Yeah. So
is it better now?
So Roman, you can hear her, not me. So it's like I have to rejoin again then.
Okay, so on my side, is everything working? Yeah, fantastic. Guys, how are you doing in the chat? How are you guys doing? Let me know in the chat. Did you guys trade anything today? I'm still in some shorts for gold. We're gonna have a look at this in just a moment after the presentation, but let us know how you guys doing. If you guys can hear me well, and Arjun, just in a moment, can you put us a plus in the chat as well? Hey guys, hey Glenn. Let's go. Ayush, thank you. Plus, yes, let's go. Thank you. You can hear me from YouTube or from the stream? From YouTube or from the stream? From both. Ayush.
Oh, it's all good. It's all good.
I can all good. Fantastic. Yeah. Amazing. Great. Ayush, amazing. Great. Glenn is saying plus as well in the chat. Fantastic. Okay, after some technical difficulties, I think everything is working fine. And at least unlike Jonathan's presentation, mine is working for now. So let's get it going. Robin is saying plus in the chat as well. Great. Ayush, like you said last time, for those of you who didn't join our last Thursday, I was talking about some very complicated topics about the footprint. No, it wasn't really complicated that much, but it was something new. It was something, it was a lot. I would say it was probably a lot for like 1 hour. But we were talking about footprint charts. We were talking about how the footprint charts are built. What is delta? And we also covered 3 different setups for the footprint charts that you could apply immediately after watching the previous session. So if you guys want to rewatch the previous one, or you didn't join last Thursday, it's from the Thursday recording on our YouTube channel. And by the way, if you are joining now, put the like and make sure that you are subscribed to our channel, because with every like, you're getting closer to giveaway. And of course, you are helping us as well. But you are getting closer to the giveaway, which is the most important for you, I would say. And of course, subscribe, because when we hit the milestones of subscribers, we also do massive giveaways and special things for you. So it's amazing, right? You're helping us, we are helping each other, and we're building some great community of traders here in Tradeify Crypto. So we appreciate every single one of you joining. Great. I see some comments. Amazing. So today we basically gonna build on top of, slightly on top and slightly separately from what we covered last week, because what we talked about last week on my slot on this live streams, our live streams, is basically footprint. Today I want to talk about the volume and footprint combinations, okay? Before we're gonna talk about the volume like as a separate thing as well later on, because there are many things that I'm using, but today we're gonna cover footprint and volume. So we built slightly on top of the last Thursday. So again, if it's confusing, it means you didn't watch that one. But nonetheless, in any case, let me just make sure that you guys can hear me well.
Yeah.
Yeah. I think I can increase the. It's really close to me. Okay, let's try like this. Let's try this. Okay, perfect.
Anastasiia, one request before you begin. Please make sure to say switching to a different screen or PPT, because the last session you were explaining something and the screen was stuck. So make sure to give us a call. So
I remember, yeah. Thank you so much, Ayush. Actually, thank you so much. Yeah. Well, let's get it going and let's get it started. So let me just check if it's working.
It's working.
Yeah,
it's working.
It's working now. I'm checking in advance. Again, so what is basically the footprint we talked about last time, right? And we covered something what is called the delta, which is the difference between the asks and bids. If it comes to volume, right, there are several ways of measuring volume in the market. We're going to talk about several of those every single week, right? And we're going to build on many different things, upon different things. And I'm going to share with you pretty much as I'm using for my trades every single day, and some things without which I do not do my analysis in general. And we're going to start with a very basic volume indicator, which a lot of people have seen, and probably each of every single one of you is familiar with this. However, not a lot of people actually do know how to use it. Okay, so it's a vertical volume indicator. It's basically the first thing that you see when you open any of your charts. It doesn't matter if it's the crypto chart, if it's exchange, if it's TradingView, if it's MetaTrader. It doesn't really matter, because in any terminal, almost in any terminal, one of the default indicators is a vertical volume indicator. It's usually just called the volume. But why is it the vertical? Well, because it measures the volume vertically by candle. Okay, and there will be two setups that I want to cover with you today. So, which is basically the reversal setup and the trend continuation setup, which are going to be including both the volume indicator, which every single one of us saw, but not a lot of us know how to use it, and trend continuation setup as well, which is going to include also the footprint. Before we're going to get into this, I have a question to every single one of you. Let us know in the chat. Well, let me know in the chat. I know that you've seen it, but are you using the volume indicator? Can you let us know in the chat if you guys are using already the volume indicator source? I can see how many of you are familiar with this, on the basis that you actually implement this in your daily analysis. Can you let me know in the chat? Plus, if you are actually using the volume indicator. Ayush, can you check the chat if they are answering, so I don't need to switch back, if possible?
Yeah, I mean,
are you using it actually?
Yeah, I am. I actually enter plus. Yeah.
So you use the volume indicator specifically. Yeah. I know you use the volume profile, but the volume as well.
Yeah, that's the first thing which I learned before volume profile. So yeah.
Yeah, that's nice. Actually, I've started using it after the volume profile. I've always saw it, and only afterwards I figured out how to use it.
Because whenever we open the trading view, that's the first indicator which pops up. So
yeah,
I learned.
They added by default, but I just deleted it. So basically, before I'm gonna go to the chat on YouTube for 1 second and see if we get some. Yeah, okay. I see some of you are actually using their volume as well. So, but the question is basically, what is volume? Because we all know, okay, volume. But what is volume? Well, the volume is basically what is measuring the interest of the market participant to the selected asset on the specified time frame. So this vertical volume is showing you, in other words, how many contracts were traded during the specific period of time, and this time period is defined by your time frame. So if you're on the 30-minute time frame, like the chart that you see in front of you, you can see the chart, right? Can you?
Yeah, we can see the chart.
Yeah, so you can see the chart. Thank you. So it's working today. So like if you look at this chart that you see in front of you, which is a 30-minute time frame chart, this volume measures the amount of contracts that were traded during this 30-minute period of time. So in other words, the higher was the amount of contracts traded during this specified period of time, the more interest the market participants, traders, institutions, doesn't matter, showed to this specific instrument during the specific period of time that you chose. And we also can see, we can also talk about volume from the perspective of the formula. So last week we covered the formula for the delta, which was the difference between ask and bid. And in front of you now is a formula for volume. So the volume formula is ask plus bid, which is essentially the summary of all buy by market orders, buy limit orders, stop losses of sellers, take profits of sellers as well, sell by market orders, sell limit orders, stop losses of buyers, and take profit of buyers. In other words, very simplified, is the total amount of contracts that were opened and closed as trade during the specified period of time. Okay, because closing the order is counting as a separate order in the futures market and in crypto market as well. Okay, so we count all of it as a separate orders. So this is why when we talk about the volume, we talk about the summary of all total contracts in front, like, right? So we can say that when the volume increased, there was a high interest of market participants to this specific instrument during these specific periods of time when the volume was high. If the volume was low, it means that the interest of market participants to this specific instrument during specific time was low and there was not a lot of volume traded. In other words, we can say that if the volume is low, it means the market participants are not really attracted to this specific instrument to trade at. It can be for many different reasons. It can be, for example, because it can be macroeconomical reasons, because we are waiting for some kind of news releases. Like, for example, before NFP, a lot of the times the volume was low. You know why? Because people are waiting for the important news release before making any trade decision. This is one example. Another example and another reasoning behind it can be, for example, that this instrument is just not tradable, right? It's just not interesting. We can see it a lot in the crypto market right now because the crypto market is down. So people still trade, for example, Bitcoin and Ethereum and some main coins, but a lot of people don't trade altcoins, and for altcoins, the volume will be low. Why? Because the market is down. There is less interest from the market participant side to the market overall, including also altcoin market, right? So there's a low interest. When the interest is low and the volume is low, sometimes it's better to stay away from the market and not trade it. in front of you now is basically the comparison between the bond print that we talked about last week and the volume indicator, right? We will see that when the volume bar increases, there will be more contracts within every single footprint candle. Obviously, because there was more interest, so there was more asks and bids traded. We can also show the footprint in a form of the volume footprint. We talked about it last week as well, which in every single footprint is going to show us also how many contracts were traded during this period of time, right, during this specific candle. So it's a comparison. You can use a volume footprint, you can use volume indicator, or you can use a combination of both of those for your trade setups. So the difference between the volume and the footprint in general is that the volume answers the question, was there a lot or a little trading during this period of time, or very simple, during this specific candle? So it's very simple and it's very visual, right? Because it helps us to quickly spot unusually high or average low volume, and it gives us a feel for the overall activity level in the market. It also helps us to spot something unusual volume spikes, for example, and see if we want to participate currently in the market or we don't, depending on the current volume, volume pattern and the behavior of the market participants. Footprint answers a different question. Footprint answers the question, how exactly did the trading unfold inside of this candle? So it's much more complex, but it also offers much more precision for us, because it helps us to quickly identify where within this candle were the biggest orders traded and who was in control, buyers or sellers. So for example, if we see the big volume spike, that's great, right? We know there was a lot of volume, there was a lot of interest, but let's say not only the volume spike is big, but also the candle is huge. And the candle sometimes for Bitcoin, for example, or Ethereum, or for the US stock index futures, or for PAX, it counts hundreds of ticks. So how do I know where within this whole hundreds of ticks were the buyers and sellers trading? Like, what was exact price level? Okay, I want to enter the market because there was a big spike. I assume the continuation, but what if the price pulls back for dozens of ticks before I'm going to enter the trade? So footprint is basically X-raying the candle, which was showing a very interesting situation by the volume pattern. So they help us to determine different things, they answer different questions, but in combination, they give us a very, very powerful insight. Okay. So for example, if we look at this chart in front of us, right? On top of you can see, Ayush, you can see the chart in front of you now, right? Yeah. So this is a mini S&P 500 contract, futures contract on 5-minute time frame. It's going to be exactly the same for crypto, so we're going to have a look at this afterwards. But in general, what we will see is that on top of it is a footprint, on the bottom of it is a volume indicator. We don't really need to even see the numbers specifically in the footprint. Of course, we can, and it's going to be more precise, but I want to give you the overall idea, right? We will see that by majority of the period of time when the chart was unfolding, the volume, the average volume on 5-minute time frame on a mini S&P 500 contract was around roughly 20,000 contracts per candle. Okay, so this is a candle that you can see in front of you. That's roughly 20,000 contracts per candle, more or less, right? And the volume was quite stable. By the end of the day, we will see the huge volume spike, which in this case was caused because there was an end of the New York session, so big institutions were also closing their orders, but also it was an unusual activity within the candle. So we can see, on the volume indicator, the first thing that we will notice, very simple and visual, is that the average was this, and then there is a one candle which is like 4-5 times bigger than the average amount of volume per candle on this time frame. So that was 85,000 contracts, which is much bigger than 20, and we can see it wasn't gradually increasing, it was slightly increasing, and a huge spike and then a huge drop of the volume. So then when we see this unusual activity, what we do, we open the footprint charts. And we will be able to answer the question, okay, what happened within this candle? So why was there a huge volume spike? And all right, but who was trading? This was 85K shorts or 85K more longs? So who was in the market at this period of time? And we will see that, okay, someone was closing their positions because it's the end of the day, but who? We will be able to see that buyers were most likely closing their positions or sellers entering the market because the majority of the footprint is bright red. So there was much more bids than asks within the middle of the candle. What I want you to notice afterwards is that after the upwards movement, the mostly bearish footprint, bearish candle, the next candle is also bearish. So the sellers that were entering the market and the buyers that were exiting the market because of their short orders, they send the price down. What happens after is I place my volume profile, or I just determine the zone, because we didn't talk about volume profile in this series yet, but let's say I just determined the zone of where was the majority of the volume within this footprint candle traded. Those are two lines, right? The black line and the yellow line. So this is approximately the zone with the majority of the contract. And I see that when the market pulls back towards the zone, it's going to get a reaction and it starts going down. Why? Because the sellers who entered the market within this candle, they are most likely, first of all, still having their sell limit orders placed there. And when the price comes back, as per what we talked about in the market auction series, right? First webinar that we had here, is sell limit orders are going to act like a wall to stop the price from moving up. And secondly, if the big sellers enter the market during this candle, they're most likely going to be protecting the price from going against them. So we're most likely going to see the reaction down again. So just like this, with a combination of volume, which is very visual, it's very easy to spot, we know something was happening. Then we look inside of the footprint, we answer the question, what exactly was happening? We can determine the zone within this candle and see if the sellers were entering the market. If the price drops, we can place a sell limit order. When the price comes back to the bright zone within a footprint, we enter short for the continuation of the trade down. So just like this, we can actually determine the reversal before it starts even happening. Because we already know there was a huge activity, outstandingly big activity within this candle, in this range of the candle. And we know that most likely the price is going to get reaction again. Of course, every single instrument, right? Because we talked about the market closure here. Every single instrument, no matter which instrument you open, US futures, US indices, stock index futures, right? ES and Q, Bitcoin and Ethereum, PAXG, it doesn't matter. Every single instrument will have its own volume pattern, what I call it. Volume pattern is when the volume is on average low, when volume is increasing, and mostly during the day, there will be specific hours when the volume will be increasing and decreasing for every single instrument. Why? Because it's obviously going to depend on its trading session. When trading session will be opening, the instruments that are getting affected by this specific trading session will have the increased volume. When trading session will be coming to the end, majority of the institutions and big market participants will be closing their orders. Well, why? Well, because the margin that you need and the cost that you need to carry the trade overnight and the risks that it carries is much higher than trading intraday. So very big traders and institutions close their big orders before the end of the session. So it also adds the volume. So mostly each instrument will have a couple of hours during the day when the volume spikes. Now, besides this, sometimes you will have the unusually big volume without a reason, right? Or without the obvious reason, or for an unusual reason. And those are high volume candles, high volume bars that you want to pay attention to, because when you see this, and besides this, opening and closure of the session also works, but especially those that are unusual, high volume candles is something that you really want to pay attention to as a trader. It can be, again, macroeconomics, it can be the sudden geopolitical tweet, a post on X from Trump, or it can be just some announcement, or it can be someone entering the big position in one big candle, right? So it can happen. Whatever it is, it's something that we want to pay attention to. So when you spot, right, the algorithm for combining the volume indicator with a footprint is the following. And after this, I'm going to make a pause. I'm going to come back to the chart for a second. The algorithm will be the following. The first thing that you want to spot is on the volume indicator, the unusual spike of volume, or the usual common spike of volume, which is at least twice higher than the average volume of this instrument. This is my filter that I figured out over the years, because sometimes I get this question like, okay, but what's the high volume? Is it a little bit higher? Is it just like 5 times higher? Well, I figured that anything that is more than twice higher than the average is something that you want to pay attention to as a trader. So you look at the average of volume pattern, right? This is a majority of the contracts. And then if you find twice higher bar on the volume indicator or more, this is something that you want to spot. You can also, for the purpose of this matter, you can actually set the filter. For example, in Atta's platform that I'm using, and majority of the platforms as well, you can set the filter for the volume on the specific instrument. So if you know that for this instrument that you trade, during the session that you trade, majority of the volume is X, you can put the filter on at least this amount of bigger, and then the volume will only show when it passes the filter, which is great because it also takes away the guesswork for you, and it's only going to show the filtered out volume candles. So this is the first thing that you want to spot. Once you spotted this bar, you find the candle that this volume bar belongs to, and you open the footprint on this candle to see who was trading within this candle. Were the buyers, sellers, and where within this candle was the biggest activity of buyers and sellers. Referring to the previous class, where within this candle the activity of buyers and sellers was the biggest, and the difference between the amount of contracts for asks and for bids were the biggest. So the biggest delta, or the smallest delta, depends, right? And when you spot this, you wait to see where the price is going to go after this, up or down, and you trade from this big zone, like big bright zone within this candle, because usually it's going to hold as a resistance or support. And the algorithm is the same for the trend continuation or for the reversal. Before we're going to continue, are you guys following? Can you please put a yes in the chat if you guys are following so far, if it makes sense? I have no doubts that you are following. Yes. Okay. Thank you. Yes, I have no doubts. Yes.
Yeah. Roman is also.
Roman is following. Thank you. Glenn says yes. Yes. Great. Ship Black 03P, the red candle, if you refer to the bearish candle, doesn't always have more bids than asks. Sometimes the bearish candle will still have the positive delta. And this is the delta divergence, which we discussed last time, and I'm going to cover it more in the next sessions as well. But referring the comment to the comment in the chat, No, not always a bearish candle has more bids than asks. Sometimes it's the opposite.
Yeah.
Yeah, so it actually happens.
The absorption and acceptance stuff. Yeah.
Sorry?
The absorption and acceptance can
Yeah.
be sometimes.
Yeah, exactly. It still can happen that we have the bearish candle and the positive delta, or the bullish candle and a negative delta. Yeah, I could have made a mistake last time. If I say something wrong, you can actually point it out, because of course I'm a human.
Yeah, but that's very impressive to see that he is watching, like he knows every single sentence you said. Yeah,
it's a good thing.
Yeah,
it's a good thing, of course. Maybe I'll make it on purpose, to check who is watching. No, I didn't. I probably made a mistake. It's okay. It's fine. It can happen. But if I do just point it out, then of course I'm going to explain again, because it happens, I repeat so many times on the one webinar, asks, beats, volume, and delta, that negative, positive, bearish, and bullish, that I'm losing account. Anyway, since we are following, that's great. So once you figured out there was a huge volume spike, you say, okay, this is interesting to have a look at. This is something that is worth, my attention. Then what you do is you open the footprint. And within the footprint, you determine the zone in which there was the majority of the volume traded. And in this footprint specifically, there was a majority of the volume within this gray zone that I highlighted. So I highlighted as a zone, and that's even without still using the volume profile, which is going to be adding even more precision afterwards for our entries and exits. But for now, we just point out, highlight the zone with the brightest delta inside, right? The brightest clusters. And what I see is that after some time of consolidation, the price went up. And after it went up, I know that the buyers, as you can see, the footprint was mostly green. So the buyers were able to push the price higher from this candle. So I say, okay, if the buyers are in control, I also want to trade in the buying direction. So what I'm going to do is I'm going to place a buy limit order when the price comes back to the same zone to test it again. Or I'm going to enter buy by market, right? If I want to see the rejection first or extra confirmations, whatever I want. In any case, the market reopens. I see the price pulls back toward the zone. I take long, and this is our potential long setup, and the price continues in the direction of the previous breakout, right? So this is one of the long setups that we could take potentially. Why? Because we had the volume spike, we looked within the footprint, we figured out where was the volume traded within this volume spike. We waited until the price went up from this level. We placed our buy limit order. We took a trade. This is a trend continuation kind of setup. Again, the algorithm is exactly the same for the reversal in this case. We see the price was going down. We did have the volume increase, but this is something that I was saying before. It's not the volume spike, right? It would still probably work, but in any case, it's not a volume spike. So what I want to see is one bar on volume, which is bigger, twice bigger or more than the average volume for this exact instrument. So this is already GC. This is interesting for those who trade pucks, for example, myself included as well, right? So what I see here is I see that the price had more or less steady volume, and then suddenly we have a volume spike. This volume spike came before the market opening in this case, or there was news, I don't remember, it depends on the period of time, But we see that this volume spike was on the reversal candle. So I find the volume spike, I figure out which candle it belongs to, and I look for the footprint within this candle. I see that majority of the volume was located, within the wick. Because if you look at this candle, it's a wick of this candle. And I see that after some time, the next candles closed above this big volume area. So the bright blue, the dark blue volume area within this candle within a wick. So the second candle after, not the next, but the candle before closes above it. Why? So it suggests that the buyers entered the market, they push the price higher, And now, most likely, if the price pulls back towards the zone, the buyers are going to protect this level. So what I do is I highlight the zone again, right? I wait for the price to pull back towards it. I enter the trade for the continuation towards the same direction of the breakout. The algorithm is exactly the same. So it's exactly the same process, but in this case, it's on the reversal. Then we had the volume spike, not in the continuation of the trend. But the logic behind doesn't change. So why do we combine the volume and a footprint? Well, first of all, because volume helps us to spot their usual activity. It's basically alerting me that, hey, something is happening, and it's giving me the easy way to see it in the mass of the charts, because the charts move very fast sometimes. There's a volatility. Sorry? My camera disconnected. 1 second. No. I just connect to my laptop camera then instead for now. So the volume helps us to spot the unusual activity in a very, very easy and visual way. So once we've done this, and it's alerting us that, hey, pay attention because something is happening, the footprint afterwards tells us what exactly happened and where exactly it happened. Besides this, it's validating or question the quality of this exact volume signal. So because we have the volume, but let's say we enter the footprint and the volume is everywhere within the candle. What I'm gonna do, I'm gonna wait for the next one to confirm. So I'm not gonna randomly enter the trade. I also can see, for example, that the volume was big, but the candle is, for example, doji candle, and the volume is going to be on top of both wicks, which shows the indecision of the market. So again, I'm not going to enter the trade because it's going to question the quality of this specific volume that was within this candle. Or it's going to validate my idea and give me extra confirmation to enter this trade. And also footprint helps us to enter the trades precisely because, again, like I said in the beginning, the volume candle can be huge. It can be hundreds or dozens of ticks. So where exactly within these dozens of hundreds of ticks should I enter the trade? Well, instead of blindly shorting just because the volume was high and it was a bearish candle, I want a confirmation where exactly the sellers were taking control and if they were taking the control over. Because this is something I can clearly see in the footprint charts and I can determine the precise levels as well. So this is why a combination of footprint and volume is giving me a very, very strong signals because it's answering several questions on different levels of understanding and analysis. So this is basically it from the theoretical side. If you guys have any questions, I'm gonna have a look in the chat. We're gonna have a look in the chat and then maybe I can open some charts and show you some examples. I don't see any questions, but hope it was useful, guys. At least give me some information in the chat that you found it useful.
Yeah. Right, whatever you thought that which you can add in your model and that will be helpful.
Sorry?
Oh, and she Black is saying good idea with Ferro. Oh, he's writing something else. Anyways, he's saying it's good, Anastasiia.
Perfect. Miss Ferrero Rocher. Nice.
It's something which we have with Jonathan, yeah.
I'm gonna load my chart and we're gonna have a look at some examples maybe as well. So just in a moment. I prefer when the market is moving. So today and yesterday I was having a blast on gold. That's great because the days before when it was ranging, it was like, you know, like, come on, do something. You know, this meme when the guy is like with a stick and it's like, do something. That was me with gold last days.
So I'm assuming that you were in shorts.
I was short, yeah. I was short.
Yeah.
I was short nice. And then I was short again and I was short again. So it's actually,
So you're holding anything or it's done?
Right now, no. We had the weekly unemployment claims 20 minutes ago.
Yeah.
So the gold was already in consolidations in the morning. I was looking for the continuation down a little bit last night, but it started reversing. So I closed my last short yesterday on break even. Today I entered a couple of more shorts when we reached the top of this range again. Now it's loading. When it's gonna load my chart, I'm gonna show you some examples. Here we go. So I entered a couple of more shorts, and then I decided I'm gonna stay away until the unemployment claims. Come on, chart. Why are you taking so long? And did I close my heat map? I did. Are you in any trades now? Well, this is loading.
I was actually in the short on the lower time frame gold. I think from the
There we go.
At 4 a.m. Yeah.
At 4 a.m.
Yeah. Small scalp on the 2-minute chart.
Oh, intense.
Yeah.
Well, this is 4-hour time frame for gold. I'm very careful basically now with continuation of shorts because today still I was taking another short from here, basically from the last 4-hour candle. So when the price reached back and started to fall again below the zone, because this was the whole zone of the rejection. So we're below the value area low of this whole zone here. So here I was taking another short because I was expecting the pullback and rejection from the value area low, but I'm still expecting that we are most likely going to continue lower. But I'm being very careful because in theory, I was expecting the reversal from here, from this area on gold. So I'm assuming that, and this is why I didn't want to hold it through the unemployment claims, because I was assuming that we might get like a spike back. In general, we are below all the volumes. So this is a monthly dynamic level. So on the monthly perspective, the dynamics is that sellers are in control now still for gold. My previous short was after we did this top, we dropped, and here was the entry. Because the 30-minute candle closed below this big volume that was also testing the value area low, so of this gray zone. And then I entered short, and then I added more shorts here. Then I added more short here, and then I closed it when the price part here and another one here. So basically it's pulling back now. So now I'm not in any more trades at the moment.
So do you think that the price will aggressively continue from here, or we'll see a good correction above and then continue lower on the high time frame?
Sorry, can you repeat, please? Someone was...
So do you think the gold will continue from this range for bearish movement lower, or we need some correction back in the range, maybe around 4,200 and then continue lower?
I'm not sure. This is why I'm not in a trade. If I would be sure that we're going to continue lower, I would be holding my short. So I was expecting the rejection from here, but I wasn't sure if we're going to break again the zone or not, so I exited. I think mostly I'm still short biased, yeah. But I do see the possibility, because this gray zone was overall my long zone. So I do see the possibility that we're going to come back. Although I'm going to only flip long if we break or switch the position with the dynamic level of the month. So on the monthly perspective, I want the volume to be starting to be below the current price. As long as on the monthly, in the weekly perspective, we are below the volumes, I'm mostly short, I would say. Yeah. So this is a 5-minute time frame, for example, on PAX. So we are pulling back towards this area here. But let me try to find some examples. For some reason, it's super slow. I have no clue why. Why is it so slow? I do not know.
It's the platform.
I think it's my laptop actually. And I think the camera disconnected because my laptop cannot handle it. Yeah, I'm pretty sure about that. Yeah, in any case, if it comes to volume, let me just close maybe some, at least it's not gonna load all the charts at once. Or not. Hello. Yeah, I think it's struggling today. It's asking for the weekend on my laptop.
I think we are in some sort of curse where every single host have to be in some sort of glitch, which ruins the presentation. Even me, Jonathan, and you. I think Boris is the one who is really happily doing the presentation every Monday.
Yeah, probably. Here, for example, so if you look at the volume, right? So again, basically what we were talking about previously inside of the presentation is that volume can be either stable or it can gradually increase, decrease, and so on. Sometimes we're gonna have a volume spike where 1 bar of the volume is unusually big compared to the volume nearby. In this example is this one, which is like 10,000 compared to the average of 5,000 before and after this volume spike. So the algorithm is the following. So I have this volume spike, right? I have this bar. I'm gonna find the candle that this volume bar belongs to. This is this candle. And if we look like we do advanced things, we're gonna essentially, I'm gonna place my volume profile and find out where was the biggest volume and so on. If we look for the combination with the footprint, I'm not gonna look at the footprint for the 30 minutes because it's quite a big footprint. But I'm gonna see that, if I place for the simplicity, because it's not loading my volume profile over this, I will find out that majority of the volume will be probably here on top. And the sell trade that I was entering is actually based on this exact ID. Yeah, it's 1 second. Hello. It's based on this exact principle. Yeah, it's here. So this is a majority of the volume within this candle. I will wait until the price goes somewhere from this volume. And I don't believe that it went higher. Why? Because there was a huge wick. So I want the strong candle, either strongly closing above or below this area here with the volume. I see that a couple of candles after the candle closed below. And I know that when it comes back, it's most likely gonna get a rejection, which it did. So I could in theory already take a short here. And then I entered short later because first of all, I missed this one. Secondly, I saw that the price was trying to go higher from this level and it failed. There was more volume coming in. And the next candle again closes below this volume and I enter short. So my today's short trade, the last short trade on gold, is partially based on exact this logic of volume combination and footprint combination that I was discussing inside.
Yeah, we can't hear you, Anastasiia.
Sorry, I pressed it accidentally. I touched it when I was expressing how good this trade was today. No, I'm gonna try to switch to the 5 minutes and find some live example if this is gonna allow me to do so. Second. It's really not really cooperating. Actually, if we can share your chart for a moment, and I'm gonna reload it. Maybe it's gonna start working a little bit faster. Okay.
Yeah, for sure.
Thanks.
Oh, my bad. my bad. I'm sharing it. I forgot it for a rejoin. Yeah. So these black sheep instead of sheep black. You're asking about volume you're asking about hype. Hype is in a range right now. I don't know what you want to take a look at, but this is what. Are you satisfied because you are asking that you want to see something? Are you done watching? Because I'm not really sure that what's happening on Hive right now. So maybe on the Zcash. And Zcash is absolutely doing the same thing like other coins. I don't know why everything is ranging for today. Maybe because I had some good trade on gold. That's why I'm not really focusing on altcoin. That's what I do when I've been trading, but it's in range. You guys can see it's just let's go on the 15-minute chart. Yeah, it's like in a pretty bad range and with a very slow volume, but that does not mean that it will move maybe after the environment something, because Zcash and all of this coin don't really wait for my opinion. You're talking about Doge. Oh, Doge is not doging.
Doge is not dodging today?
Yeah, it's in a range. And I said Doge, and Boris is here. Hello, Boris.
Hey guys, how are you?
Hey Boris, how are you doing?
I'm doing good. It looks like the market's...
Yeah, he is. That's how we started.
Am I on mute?
It's it's only for me.
No, you are not on mute. It's all good.
I have to rejoin.
Okay.
Yeah.
Yeah. So I'm doing good, but
how are you, Boris?
I'm good. How are you?
I'm good. Have you traded anything today?
Not yet. Like, I like to wait for the stream to be surprised by what the market is doing, because basically trade New York hours, so I don't really look at anything until around this time. So I'm just really getting a fresh look at things, and I would say things aren't looking too hot. Except for like WLD, WorldCoin, and Zcash.
Yeah. Well, we have the weekly unemployment claims as claims as well, which was also partially influenced on obviously the price action now, especially after the CPI yesterday.
Yeah. What was the unemployment data? What did it come in at?
I didn't see the numbers yet because I was doing the presentation, but I know, it was coming out because it's every single week, right? At same time. So it's unemployment claims and initial and continuing one. Boris, are you sharing your chart? Because I'm not sure. I'm trying to reload my chart because it was hanging a little bit on me today.
I'm assuming the unemployment data was bad, in the sense that more people lost their jobs, because we had a big spike in Bitcoin in the past. What was this? On the 5 minutes? 4, what time is it now? I don't know, over the past few hours. So it went from 61.7 all the way to 63. So Bitcoin actually is doing good. Let me check what the unemployment data actually was, though.
I know, I'm gonna open and have a look at it in a second.
I don't
We
know
did
what
have the
is
interest rate increase for the first time in our European Central Bank since 2023. So the European Central Bank, as predicted, hiked the rate as well 45 minutes ago. So now we have 2.25 interest rate instead of 2% for the Europe, the base rate as well. And we did have the PPI coming out. Today also PPI was as previous one higher than expected. Yeah, so higher than expected, and there was more initial jobless claims than last week and more continuing jobless claims as last week as well. So although the PPI was higher than the previous one, there was also more jobless claims this week for the first time in a while, which is the first reversal in jobless claims in the labor market since quite a while, because before we had quite a strong labor market as well all this time. And one of the reasons that we were not looking for any reversal like in the markets is because basically the labor market was really, really strong. And now it's the first time when the labor market seems to be reversing slightly. So we might get some hopes for the better policy from the Federal Reserve as well. Let's see.
Yeah, so basically like bad economic data is good for equity markets and crypto.
Kinda now, yes. Kinda, yeah. Because the bad labor market and the worse situation in the economy is going to be good for the interest rate. And this is what everyone is looking for at the current moment.
Yeah. Also, I think a big story that we didn't factor in is the Iran conflict. So I think the US resumed strikes on Iran, and now Iran is saying there's a total blockade on the Strait of Hormuz again, and they just hit a couple of ships, and yeah, it looks like the war continues.
Yeah, because yesterday Trump was also posting that he is willing to hit Iran again.
Yeah, Trump is making some crazy tweets right now, saying people would not be able to drink water. I don't want to do that. Trump, right? I'm not reading this. There'll be more bombing tonight, bigger, more powerful. Oh, there he goes. Like he wakes up and starts tweeting back in Washington.
I'm not sure he sleeps.
He says Iran not good at fighting.
It's how I used to talk in my school.
Yeah, I feel it's like very
Sorry?
kind of like a bully.
Yeah, it is.
He's also saying I'd rather not hit bridges and power plants. It's still a game for him.
This guy is crazy. Well, I had a good run on gold the past couple of days, so I think I'm going to be slowly done for the week because we're getting closer to Friday. I don't trade on Friday, and Trump is getting crazier, closer to the weekend again.
Oh. Yeah, I guess, were you short on gold, Anastasia?
I was short all this time. Yeah, I was short all this time. Yeah. And now after the PPI, it's pulling back slightly. So I'm not short anymore also because we are below the zone that I was expecting for longs already. And I'm assuming that we still might get the reversal toward this zone again. My platform is not really working very good today with me. Here, this was a whole zone. If you're on my screen right now.
Yeah, we are.
Yeah, I think, yeah. So we were like below this gray zone, which was a reversal zone for me. We tested it several times, the value area low of the zone. We had several times of the volume touch of the zone. We talked about this with Ayush before. So, and now I was short until here, and then I closed this trade before the PPI and before the initial jobless claims, and price starts pulling back. We might get another test, or we might go higher because also it's ranging. And because we already passed the zone of reversal, I'm assuming we might get a spike back to get like a V-shaped recovery like gold likes to do in the past week. So I'm not really sure I want to participate in this ride anymore.
Yeah, it looks like to me, like when we got the package G chart, I think we took out the low from March on package G. I don't know if it's the same on like the gold futures, but I think package G is a bit oversold now. Okay. Yeah,
I don't believe in it's oversold or overbought because I like the saying. I really like the saying that the price can continue to go down longer than we are able and capable of paying for it,
I agree. Yeah, it could always go lower and price could also go higher. I mean, we've seen that in both directions in Bitcoin and, during several cycles. And I think with every asset, there's been like, parabolic runs to the upside and then just complete parabolic dumps to the downside. I think when gold hit 4,000, well, actually when we hit like 40, did we hit like 4,800 and then go back to 4,000? Then it kept climbing all the way to 5,500. So I wouldn't call for like a trend reversal here. Just maybe a temporary bounce back, perhaps.
Yeah.
Because, I just want to like follow up on Jonathan's presentation from yesterday about the Bollinger Bands. So this indicator that I have here, this is the Bollinger Band width percentile, and basically what this represents is when the Bollinger Bands get to like extremes. And usually that marks like the end of a big trending move in markets. So you can kind of like visually see this. So basically when you get this big like red marker on this indicator, this indicates the Bollinger Bands are at extremes, or the percentiles are at extremes. And this does usually tend to mark the end of a trend. So for example, when this started flashing red, we saw a big decrease in package G. And it also works kind of in reverse. So when we get record low or like low levels of volatility, so when we get, this is a bit, let me make this cleaner to read. So essentially this line goes from 0% to 100%. So whenever we get down to like 0%, this usually means we're low levels of volatility, and low levels of volatility usually precede big moves. So it's not always perfect, but we kind of like saw this in action now. So we had this indicator flash blue, and then the big move happened. So we dropped by like, let's see, from the time it flashed blue to the current price. Yeah, that was a move about 13% down. So I think it's actually a very good indicator, like Jonathan was explaining yesterday, that a lot of people use. So this is a derivative, or the BBWP is derived from the Bollinger Bands, and actually it's very good to use in crypto as well, especially on higher time frames. And I'm just like looking at this now, and we're at a 94% read. So soon, this is going to start probably flashing red, which means we're at extreme levels of volatility, and we're likely to see not exactly a reversal, but probably things start to consolidate before the next big move.
Yeah.
Curious what it's showing on Bitcoin. Yeah, so kind of interesting to see. It flashed red, indicating that the big move is probably coming to an end. And then we saw this bounce, and now Bitcoin is basically consolidating. So it works pretty well on Bitcoin. And also, you could see when it flashed like blue, this was like warning people that a big move is incoming. So, but it doesn't tell you in which direction, which is why you need to combine it with your other like analysis methods or other indicators, maybe some moving averages, and with that you can like make a pretty powerful system.
I'm gonna jump off for 1 minute, reload my platform because I want to show a couple of things. It's not loading, and
Okay.
I'll join back in just 2 minutes. Maybe it's gonna load like this.
Sure.
See you guys in 1 minute.
Ayush, did you win or lose today?
Today I actually won on lower time frame.
Oh wow!
Yeah.
So 3 out of 4 winning days so far.
You can say that it's on lower time frame, and I'm actually going to use deep charts from today. I think I have to get used to with the platform, but it was a short from this zone. I think this is something. Yeah. This was the area where I went short from, because it had really low volume in this resistance area. You can see it is a double top setup on PaxG. So I entered short here, and I think in 2, 3, or 4 candles I was out with 1:1.5 and done for the day. And also in morning, I had a trade in hype.
Oh
Yeah, let me share that as well.
yeah, let's see it. Hype has been one of the more volatile tokens in the market.
Yeah. Okay. So this let's go on lower time frame. So actually, if you know, Boris, we were talking about this level yesterday from this area, from this low volume node, currently working as support, and had this trade. Wait, I think it needs. Okay. Yeah. So this was the trade in morning. If I do the bar replay and show you what kind of volume structure we had, the reason and stuff. So yeah, so this was the reaction we got from this low volume area from the previous day. Gave us a pullback, came lower this at the support level, maybe this one, and I saw a really good delta flip and went long till this, targeting this point of control, because you know that they act as magnet. So yeah, this was a trade on the hype, and it actually moves. It's really volatile, and also commission is really less. It was like a $5 commission on this trade, only 5. Who is this spamming in the chat? Yes, F1G. I have some powers now. Don't think that we need Jonathan to ban you. Yeah. When's the giveaway? I think that's something which Boris can answer. When's the giveaway?
When's the giveaway?
Yeah.
Well, it will be at the end of the show, so you guys have to keep.
No, I mean the target.
Oh. Okay. Let me see. What are we at right now?
We're 22.
Oh.
Let's do 30.
Yeah, 30. 30 is good.
Yeah. So hit the like button. I think few more likes and we'll do the giveaway. And yeah, and I saw the volume bubbles on the chart. What happened to Lab? It's the only coin which is really green today.
What happened to what? Oh,
The
Lab.
Lab,
What?
yeah.
Lab is down 20%. What are you talking about?
Oh
Lab?
no, I think. Let me. It was green when you joined. Maybe
Wait,
you
maybe.
had to reload.
Wait a minute, let's see.
I'm 100% sure it was the only. Okay, wait.
Maybe it was up and then it just crashed. I don't know.
Wait. I have proof. I have proof.
You have proof.
Yeah.
Okay.
Wait. I'm going to copy paste on my screen on TradingView. I was like, why the only coin is really doing good? Look at this.
Oh, I think that was based on the hourly. Let me actually switch. This is the
Oh.
Lab hourly chart. And you can see in the last hour, it was up 14%. So it's interesting. I don't know, how is Crypto Bubbles like measuring the percent change? It's like literally based on the past 1 hour of performance. It's like a rolling period, you know what I mean? So right now it's what time is it? Like 9:20 in New York. So is it based from like 8:21 to 9:21, or is it based from like 9 to 10? I'm thinking it's like based on a rolling period. Oh, wait, look, it's back.
Yeah, that's what I was saying. I was like,
Wait,
why?
interesting. Okay. Yeah, Lab. I don't know. Lab overall is in a downtrend, but it did have a spike up. Honestly, I've never heard of Lab. I think. Should we take a look at what was it called? Clash. It's one of our favorite coins from the previous week. Wow, so Clash is still holding on to this support level at 1 cent. So still, I think that there's some potential here. If people are interested in this token, like if we buy at this support and go back to the highs, we're looking at a 700% move.
But it's a dying project.
Yes, like many in this space right now, a lot of projects are dying. I mean, I was looking at like Engine Coin, which used to be a popular coin back in the day, and this is another dying project, it seems like. So I actually wanted to go short, but on my personal account, this pair wasn't they like delisted this pair. Yeah, so overall, man, it looks like we're just consolidating after the price action over the weekend. Like Bitcoin is still holding on to 60K. I mean, Ethereum is doing nothing on the daily. I don't know. Like even on the 4 hour, I don't even know. This is like a no trade zone for me. It's like we're basically stuck in a range on Ethereum between 1701 and 1606. So I would wait for one of these levels to break. If 1700 can break to the upside, we can see it move probably up to 1850 or so. And then if it breaks to the downside, we'll see it move down to 1500. So I'm gonna watch this range. On Ethereum, let's take a look. Let's look at Bitcoin. Oh, that's my washing machine. I can't do anything about it. Oh, okay. Yeah, hopefully it shuts up soon. Yeah, but in terms of let's look at the Bitcoin range. This one. I mean, Bitcoin is also stuck in a range here. So, I mean, this kind of scenario, we have to resort to like basic support and resistance. So, clear resistance at 63.8, and we got some nice support at the $60,000 level. That's also psychological level. So I think that's the current range on Bitcoin. I don't know. What are you guys thinking? Like for Bitcoin and Ethereum in the short term, looks to me like they're consolidating and not doing too many interesting things right now.
Yeah, range day. That's what Glenn says.
Yeah. I hate ranges. It's like so boring for me. Because I'm more of a trend following trader, so when I see these things, it's just not a lot of like trading opportunities for my style.
Mm-hmm.
So I kind of don't want to trade anything.
I can hear, I think, Boris, in your background, there is some rocket or maybe some sort of engine for launch.
It's a washing machine, huh?
Oh, it's a washing machine. Yeah. Working hard.
You
The
could
washing
say
machine is working
you
hard.
could say it's a rocket. It would be more epic, at least.
Yeah.
Yes, rockets. It's preparing to launch at. I don't know who to launch this rocket at. But it's ready. It's ready to be launched. Yeah, let's look at the ETF flows. Let's see. Do we have any positive flows from yesterday? Probably not. Let's see, June. See the latest update for June 10th. Oh, once again, negative outflows. So, 1, 2, 3, 4, 5, 6, 7, 8. Yeah, only like one positive info day from the last almost 3 weeks. So this is not a good sign. And once again, look where most of the selling is coming from. It's coming from BlackRock. And now I think this rocket is ready to launch at, well, I'm obviously not going to launch a rocket at BlackRock headquarters or anything. That would be crazy. But I think BlackRock should stop selling Bitcoin and start buying some. And looking at this rocket is really preparing to do something. I know S&P is up slightly, but kind of well off its highs. So we would need to see, we need to see a 5% movement back up to reclaim the highs here. And then the scary thing is, like, if you take a look at the, let's actually take a look at the NASDAQ. Let me find it here. The scary thing, look how much further we can like drop here. Because if the NASDAQ keeps dropping, I don't see another support level until like 26,000 on the NASDAQ 100 CFD futures. So it's going to be a potential 7% move to the downside.
Yeah. So I have a question for both of you guys, because, and also for Anastasiia as well. Which pair is really difficult to trade? Is it NQ or gold?
Boris, you have an opinion on this?
Wait, which one? What did you say? Which one is harder to trade or easier?
Yeah, harder, or maybe both. Whatever.
I think I would say Nasdaq because it's really sensitive to like company earnings and stuff, while gold is more. I mean, it's more affected by like interest rates and less by whatever's happening with big tech earnings. So I would choose. Yeah, I would say Nasdaq is harder to trade, and gold is. I think it's more technically easier, and it's better for like technical analysts. What do you guys think?
For me personally, it depends on period of time. There is no harder or easier. They are both quite volatile, in my personal opinion. There are periods of time when Nasdaq is easier to trade. There are periods of time when gold is easier to trade. And I do shift from time to time from one to another instrument my main attention. There was a period of time when I was only trading NQ and S&P 500. Right now, there is a period of time when I only trade gold. There was also a time when I was only trading oil. So I choose once in a while which instrument works the best and gives me the easiest results in the best way. And I focus on that. I'm assuming that when the crypto season is going to start, we might switch, for example, towards this. If the interest rates will start to get cut and we will see some trending in the US equity market as well, I might switch to this. So it depends. If gold, for example, is in consolidation and the equity market is moving and trending, I'm on the same side as Boris. I don't like to arrange in market. So I'm not gonna trade the range in market. Like, for example, the reason I stepped away from oil is because oil became that after after Biden became a president in the second half of, after COVID and everything, it just became that. There's nothing happening. So I stepped away from oil. But from time to time, there will be periods when one of the assets is, for example, easier, no brainer. It's like stupid, simple ideas, for example, At the current moment, for example, I might step away from gold until the end of the week because we completed the move that I was expecting. I want to see how it's going to unfold until the end of the week. But for example, some other assets might be more interesting. So for example, from Bitcoin, I'm expecting this move to the downside. And it's not that Bitcoin is easier for me. It's like, okay, it's just because gold right now is not in the position when I want to trade it, and it gets more difficult for me to trade it in this state of the market for this specific instrument. So I'd say it like this. What's your opinion, Ayush, though?
On the intraday, I don't know why, but gold's been treating me well. That's all I can say for now, because I don't really, like to analyze in terms of numbers and stuff. I don't have to because I'm preparing a list. Yeah. So it's like, I don't know why, but I feel gold is better. I'm still being careful.
Better.
I know. Yeah. In terms of the price action and stuff, it's like always looking for a trade from low volume nodes and some scalps, because I think the world on the GC and NQ on the lower time frame is different than the higher time frame, I believe, because I have never taken any trade on the 1 hour chart or 15 minute in the future in the crypto, to be honest. The only where I trade on the higher time frame is Bitcoin and Ethereum. The rest are below 5 minute. So yeah, it's like quick in and out. So currently gold is being good, yeah. I'm not saying NQ is being difficult, but it's like gold. I'll be done with gold before streaming, and if I talk about my time zone, I'll be done in the afternoon. And then for the rest of the day, I can just prepare for stream and stuff and work on the projects that we have. For NQ, I have to wait for an entire day, and just have to trade after stream. So it gives me a little bit of headaches. So gold is like done. before we live. So yeah.
Yeah, it's true. But it depends again, Some, for example, for me, gold is easier as well now. But again, it was not. It's what used to be not like this.
Yeah.
So.
Okay,
Guys.
I'm done with the list.
Oh, did we hit 30 likes?
Yeah, we did hit the 30 likes.
Oh, good. 33 now. Let's try to get to 50 though by the end. I think it's possible.
Not 50. Let's be greedy. Let's say 70 or 60.
Okay.
Let's say 60.
60.
I miss that guy who used to pump. I think he's not here from many streams. Maybe he got hurt by my sentences. Let's do 1 minute. I actually told him to, spend whatever money he has and just give us 10,000 or more likes. I wanted to check, is it actually true or something? From that day, there is no pump. Okay, so we are starting, and I'm assuming that we have many names. We'll see many unique ducks today. And the first one, I'm going to analyze it right now. The first one is the purple, maybe. So Yash, I feel it's not your day today, so you can sit back and watch. Oh, I had to. Okay, the volume is okay. Now we are good. And also, there is one guy asking that I won an account yesterday. Can I participate today? There are people in here who won 3 to 4 accounts. So don't worry. Don't worry. And Michael, I think. Oh no! Look at this duck with the beard.
Oh, that's an interesting duck. Solana Bully.
Yeah.
Bully.
Oh,
looks like Michael might win, or Torjack or something.
Torjack, yeah. Torjack, congrats! You won a 10K two-step account. If you are with us in the chat, make sure to write something and add your email to your YouTube description in order to get your account easily and early.
Torjack just wrote, "It's me." So.
Oh,
congratulations.
Yeah. He's our new consistent Tradeify crypto viewer. So yeah, congrats. I'm happy that you won. Thank you. And my email is already done. So he was prepared.
Nice. I wanted to look at the Crypto Fear and Greed Index because once again, we are at extreme fear right now. So yeah, 13. We're at a 13 read, which is like in the extreme zone. But sometimes we've gotten as low as let's see, an 8 or even a 5, and usually that does tend to mark at least temporary bottoms. So I do think 60K is at least a temporary bottom for now. Because I've been talking to some people and they're like, yeah, Bitcoin's going to go to 40, 30, 20. I just don't think it's going to happen right now. There's way too much fear in the market. I don't know. What are your friends and I don't know if your friends and family talk about crypto. Are they scared?
Thankfully, they don't.
They don't, yeah.
Okay.
At the moment, they don't, and I think that's...
that should be consistent.
Honestly, everything I think below 60K or around 60K is good to buy long-term if you're holding long-term.
Yeah.
For me, it's my opinion, not financial advice,
Yeah, and I guess we should take a look at the liquidation levels right now. See how that's looking like. See if there's any maybe some short positions building up. Just wait for this to load. So I think, yeah, basically, it's like the liquidation heat maps are following basically the range that we're stuck in, basically the horizontal and support lines that I marked earlier. We have a lot of potential shorts to be liquidated if price starts getting above 63.5, and then also at 64. So if we can get above 64, I think we can move higher. At the same time, there is some liquidity sitting at around 60.5, which makes sense. But we're kind of far away from this $60,000 level. We're way closer to, hurting the shorts here. Let's zoom out to the liquidation map, actually. Switch to, let's see here. Yeah, if price goes to 60.5, it's going to be about 1.38 billion in long liquidations. But on the short side, if we can start, getting to 63.5, you're going to start seeing half a billion in short liquidations. Now, if we get to 65, we'll get to 1 billion short liquidations. So we'll see. Price is kind of stuck in the middle between these two areas right now. But I think there is more longs to be liquidated than shorts. Just looking at the liquidation map. Yeah, on hyperliquid, let's see. 1.25. Okay. Yeah. So basically 60,000 to the downside, and we'll start to see big short liquidations, and then, big long liquidations, and then 63.5 to 64 to the upside, and we'll start seeing short liquidations. So if we pierce below 60, we'll start seeing longs get liquidated, and about 64, we'll start seeing some big shorts being liquidated. So those are the two key levels I'd be watching. And I think they line up pretty well with the horizontal levels I mapped out. Let's see. Where did I draw this? Oh, yeah. So, pretty much, 60,000 to the downside, 66.8 to the upside.
Are you looking for any, again, what is 60?
Am I what?
No, again, can you repeat the levels? I'm comparing it to my chart now, just to...
Yeah, around roughly 60,000 would be a key area to the downside, and
to the downside, you mean to as a support?
Yeah.
Okay.
And then, for us to start seeing short liquidations, I'm looking at 63.5 to 64,000.
63.5, 64. Yeah. I'm looking, the reason I'm asking is because I'm practically looking for short now until approximately 60,200 to 60,000. So do you think if we go to 60, the price would pull back up after?
I think we can, I don't know, it's hard to say because we did go below 60,000 on Friday. I don't know if this counts as a test on, what was this? Yeah, yesterday, Wednesday, we went down as low as 60.5. So I think that was close enough to test the 60K level. If we go back down against this level, I'm not confident that this can hold because I think there was a lot of buying here. Like if we put on volume, we'll just see. Just the basic volume indicator on TradingView. Yeah, you can tell there was a lot of buying that went on here initially. Then some more buying yesterday. Well, selling and buying, of course. So we'll see. Honestly, I'm not too confident if Bitcoin goes down to 60K that we'll be able to hold
Recover.
it on the third time. Like the more times we test the support, the weaker it gets. So the third attempt, I don't know, we might see a flush lower. And we haven't really, we haven't really tested the high, which was 64.3. I mean, I guess it's kind of close, but
64.3.
yeah, that was
This one, yeah.
That was the high from Sunday.
Yeah, I see it.
And what you would want to see is like a V-shaped recovery. So the fact that we went to 60K and it's already Thursday, and we're like, we're still like in the low 60s. Maybe you can call it mid 60,000s. It's not, what you would want to see is like something like this. So basically a big flush down, then a V bottom kind of recovery, kind of like this. But we're not getting that. It's kind of like price is really like slowing down. Momentum is slowing down. So yeah, I want to see something like this, like just like a V bottom recovery, kind of like what we saw.
I think we are on your chart.
Yeah.
Yeah. Okay. Sorry, it's not loading for me. So,
like for example, I'm trying to think of examples where, like a good example of a V bottom was, over here in July of 2021 when Bitcoin hit 30,000. Yeah, I remember this moment because this was actually one of my better trading periods because 30K was a big level back in 2020, 21. And when we pierced this level during, I think this was when like the Luna collapse was happening. You could see how price reacted and how, look at like all the buy volume we had during this time period. Now compare it to what we're seeing now. I'll have to go all the way to the present. Okay. Yeah, and price is just kind of consolidating instead of recovering. And actually, we're seeing more selling than buying, right? On the
we definitely have more selling pressure right now for Bitcoin. I think we barely actually it's reacting to any attempts to recover.
Yeah, and this kind of matches what we're seeing with the ETF flows. It's like maybe there's some buying going on, but overall there's more like aggregate selling happening. So yeah, not to comment. Like I said, the monthly EMA, the 21 monthly EMA is coming in at around this level. So is the 200 simple. So we do have some very key like long-term moving averages at this zone. Yeah, like we're still holding the 200 simple. So this is represented by this white line on my chart. So the 200 simple weekly EMA, let me switch the chart. It's coming in at around 62K. So far we're holding it. We held it last week. We're so far holding it this week. But again, we like tested it once in February, had a nice recovery actually. Then tested it again last week, obviously. This week, I mean, we're barely getting a reaction. Like, look at this. This is basically like I guess you call it like a doji candle. So not a reversal candle, kind of like just like an indecision candle. So I would have liked to see a better reaction. At the same time, we need to wait for this level to break to put on more shorts. I think for now, most likely we're going to consolidate between this weekly 200 SMA represented by the white line, and then this is the 200 EMA on the weekly, this purple line. So I think we might consolidate here for a bit. Also, I don't like how, another key thing to be aware of if you're using like an EMA system, when you start to see like these moving averages slope down, that is not a good sign. You want to see these curling up. So it's kind of like a nuance thing. Like you can see this is all like curling down. So the EMAs that I'm using here, it's a 55, 89, 21, 13. Also, I have a 10 simple here. So it's all like all bad except for our last line of defense for Bitcoin is like the 200-week SMA at around $62,000.
Guys,
Yeah.
we have to do the giveaway again.
Why?
Because there was a different war going on in the chat. They were saying that the guy won multiple accounts with many usernames, or maybe he has many YouTube channels. And he admitted that.
Whoa. At least he admitted that. That's respect, I would say.
Yeah.
No. This is honest.
Yeah.
I mean, it's dishonestly honest. Because you kind of do the dishonest thing and you admit it afterwards.
So yeah, we are doing it again. I'm sharing my screen.
Well, let's do this again. You guys have another chance to win.
Yeah, this time for 30 seconds. And if he wins again, then I can't do anything. Okay?
Then it's a fate.
Yeah.
Supposed to be like that.
Yeah, so let's see who wins. 30 seconds. Who is that duplicate removed? Okay, it might be the one from the previous list, but NG to the moon. No, you're not. It's the weird dog, Wild Use. Okay, look at him. He was calling him out to win an account. Wild Use called the guy out and to win an account. He knew that he's going to win. Wild Use, and he actually said that I would like an account. Good morning in this stream, and Anastasiia was explaining about the order flow and stuff. So yeah, good manifestation. Yeah, teach me too.
Oh, congratulations, Wild.
Congratulations, you got what you really wanted. Manifestation, you know what they call it.
Okay, I think or are you real White Use, or is someone mimicking him? Because right now it's really difficult. I think instead of analyzing the chart, from tomorrow we're going to check every single one is real or not. Okay, I think you already have added the account. I think you know what the process is. So yeah, you'll congrats, you won 1K 5-step account. Try to pass it. Yeah, while this was the one who pointed it first. Yeah, exactly. Anyway. So yeah, please, Boris, continue.
Yeah, I'm looking at the aggregator right now, and looks like we just pierced the 63K level, actually. So actually, I mean, I don't know, we're still in the range though. Like, to me, like, this is a nice move on maybe the 30-minute time frame. Let me go back to Bitcoin. Let me remove. Let's take a look. Yeah, I guess, if I had to make a trade here, I'd go long based on 30-minute time frame.
Actually, right now?
Yeah. I mean, let's talk about the lower time frames because all the action is happening.
What are the lower time frames in your way of analyzing the market?
I mean, personally, for me, I would not go lower than for Bitcoin, no lower than the 50-minute. I think below that, it just gets it's too volatile for me, and it's too fast moving. So I think the 50-minute is actually a very good time frame. I don't know. What about you guys? What is the lowest time frame you would trade on BTC?
Oh, on BTC, it's 15.
Is it would it be the same for, I guess, gold and
No.
no?
Different for gold and NQ.
No.
So what are your limit? I mean, what are your, I guess, limits, or what's the lowest you'd go down to on NQ or gold or package G?
You asking me?
I'm asking both of you. Like, what are your what's the lowest time frame you would go down to?
I
2
go.
minutes.
Okay, yeah. 2 minutes for you, Ayush?
Yeah, for gold. Yeah.
So not 1 minute anymore?
Yeah, it's very close to 1 minute. Doesn't make really a difference, but yeah, 2 minutes.
For me, I go as low as range XY chart. If we can switch to my screen, it's something that looks like this. And it's basically a different type of chart. So it's not depending on the time period of time that is forming. It depends essentially on the volume and what is inside of the candle. But it's much faster than the minutes, but it's slower than seconds charts. So it's just formed differently. But sometimes the period of formation of this one candle can take a couple of minutes. Sometimes it can take like 15 minutes and so on, depending on the volatility inside of the market. So this is for Bitcoin right now. And if you look at gold, for example, it's gonna be this here. So this is this, yeah. So for example, this between this and this candle, it was like 10 seconds. No, I'm lying, 15 seconds difference. And between this and this candle, it was like 1 minute something difference, 1 minute 30 seconds. So you see, it depends basically on volatility inside of the market, but that's the lowest I go for trade management, for entering trades and so on.
Oh.
It gives you it gives you probably anxiety when you look at it.
Yeah.
I bet.
This is very fascinating. I could like look at this.
The thing is, you know, that I don't really trade based on this time frame. I manage my trade on this time frame when it's already running, or I use it for confirmation of entering the trade when it's already in my zone that I determine on 4 hours and 30 minutes. So, you know, I build my bias in high time frames, and this one I just use for confirmation. But yeah,
makes sense. Yeah, I would say. Looking at the 15-minute, guys, like, yeah, we're getting rejected now. Let me switch back to AgriTrade. So yeah, we kind of got a spike up to 63. I'm seeing some selling going back to the actual chart here. I would need to see a closure above 63,000. So we're below 63,000 again. I think if we can get above 63, we'll test this level, 63.8, because on the lower time frames, we are in an uptrend. So if you guys are trading the 15-minute, I'd watch, yeah, basically 63K. And yeah, if we go below this wick from earlier today at 62.4, yeah, we might see a move down, maybe back down to the high value node on the volume profile, which is at around 61.7. So we'll see. Overall, like very rangy price action. Not for me, but might be good for scalpers. Yeah.
Yeah.
And I think that is the end of this week, right? It's Thursday.
Yeah.
So no stream on Friday.
Exactly. Okay, guys, I will have to jump off on Thursdays a little bit earlier. Well, just on time. So, guys, thank you so much. We appreciate you joining. Thank you for being on the second part of our webinar regarding volume and order flow as well today. And I'm wishing everyone a profitable rest of the week. Boris, Ayush, you too. And we'll see you on Monday.
Yeah,
All right,
see you
guys.
guys on Monday. Bye-bye.
See you on Monday. Trade safely. Bye.